Hello, everyone, and welcome back to another brand new episode of Tax Thursday. I am your host, DDQ, here with Smart Counsel's tax resident attorney, Dionne Kellier. Happy Tax Thursday, Dionne.
Happy Tax Thursday, Dee Dee. Happy Thanksgiving. Happy
Yes.
Indigenous Peoples Day. Happy enjoying the time with your family.
Yes, seriously though, when you guys are watching this will be Thanksgiving Day, the Thursday of November that everyone celebrates for dinner or Indigenous, like you said. So thank you all so much for joining us for another episode. For those who are new, Smart Counsel is a minority and woman-owned firm handling all kinds of practice areas such as energy, corporate, regulatory, cannabis, and of course tax. So visit our website at www.smart-counsel.com to learn more. So this is an attention to all waiters, waitresses, barbers, cosmetologists, baristas. This episode is for you guys. Anyone who has like a tax wage or a tip, gaining tip with their jobs. This is something you guys want to pay attention to because today we are talking about a 45B FICA Tax Tip Credit and what write-offs cosmetologists and barbers can use during tax season. So get your pens and papers out. This is going to be a really good episode. So Dionne, to start off with, what is a 45B FICA tax tip credit?
It is a non-refundable income tax credit that is available to employers operating food and beverage establishments, for a portion of employer Social Security taxes paid or incurred on employee cash tips. That's called the FICA Tip Credit. Employee tip income is treated as employer-provided wages for purposes of Federal Insurance Contributions Act, FICA, taxes, which is your federal withholding, Social Security, and Medicare. Therefore, tip income is subject to both the employee and employer portions of the FICA taxes up to the FICA taxable wages. Restaurants can claim a credit against their federal income tax based on the share of FICA and Medicare employment taxes they paid on tip income that employees report. And in an ideal system, the employer portion of employment taxes due upon tip income would somehow be paid by those who leave the tips, which would be like you and I, the customers. After all, they're the ones that are compensating the worker. But since there's no reasonable way to make that happen, the law assigns the responsibility to the employer. And so, how did I land on this topic? I landed on this topic because I actually was looking at things that hairstylists or cosmetologists and barbers can deduct for, tax season, because this is the time of year when all of my, cosmetologists and barber friends are super busy. They're super slammed. Everybody wants to be beautiful. My, nail techs, lash techs, eyebrows, everything, skincare, all of that. They're super busy. And so I was like, oh, let me look for what they can write off. All right. So, but as I started doing the research, I saw this 45B tip thing and I was like, well, this is interesting. And then like in this presentation, you'll see how it applies or how it affects people in the cosmetology industry. And really, I knew nothing about this until I started reviewing this topic, and it totally makes sense. And so if you own a restaurant or if you own somewhere that has 10 or more, employees working for you, that somewhere that is a food establishment or a restaurant establishment, then you can take advantage of this credit. So
the FICA tax tip credit. Right?
Exactly. So What's the process? The customer pays tips to the wait staff, bartenders, etc. Employees who get more than $20 in tip a month are required to report the sum of the tips they receive to their employer at least once a month. When employees get their paycheck for hourly wages, employers withhold income tax and employment tax. Employers of tipped employees must withhold the employee's share of taxes due upon the tip income reported. And when those employers remit the withholdings to the government, they're required to add their matching share of the employment taxes owed based on the total of each employee's wages and tips. All right, so a couple of things to break down. Number one, if you have just a regular job, it doesn't matter where, and you are getting paid a W-2 check. Your check, it'll have your gross amount that you make, and then it'll have your federal withholding, Social Security, Medicare. That's FICA, all right? So then you get paid the net amount. When your employer withholds that amount from your check, whatever it is that they're withholding, they're matching that withholding as well. And both of those are going to the Department of Revenue for that particular state. I know we do EFTPS here. I think that may be universal, but I'm not sure. So then they remit that full amount for, so for employee Dionne from her check took I took $500, and then I'm the employer and I have to match it. So it's another $500. So on Dionne's behalf, it's $1,000. So that's any job USA. So now you get into people that work at restaurants. People that work at restaurants don't necessarily they make below minimum wage, right? Because the thought is that they make a lot of it up in tips. So if somebody's accurately reporting, it is it's an honor system, right? Because I think most people make more than $20 in tips, but how many people report it? So I guess until you get caught, I mean, I don't know. I've never been a server, and I used to want to work at Wendy's.
Really?
I did, but I've never been. My customer service skills, they're not that good, because I just don't think somebody should be rude to you just because you're working in a restaurant, and I don't think I can handle that in a positive manner.
It's not the easiest thing, for sure.
yeah. So I'm always nice to my servers, and because it can't be an easy job. You're on your feet. You're dealing with different people. Anyways, so when the employees at a restaurant, they get paid, below minimum wage, and whatever it is that they got in tips, they are supposed to report it to their employer. And then the employer now, so say that their check, say they got paid $5 an hour. And so they worked, $5 an hour, they worked 20 hours, so that would be $100 check, right? But in tips, they made $500 in tips, and they reported it accurately to their employer. The employer there's a math calculation that they do, and I'll talk about it more. The employer has to take the federal withholding out of that check that is $100, right? Because the 5 times 20 to get you 100 for your paycheck, they have to take the federal withholding, the employee's portion, out of that $100 check based off of the $500 tip.
Oh, okay.
Right? And then they have to match it, because they're already taking, if you're getting a check, the $100 check, and it's a W-2 check, there's already federal withholding calculated on the employer side. So now you also have to do it on the tip amount. And that is what the employer remits on the employee's behalf to the IRS.
And then the amount that they're taking out, where does that exactly go to? It goes towards the Medicare, the Social Security.
So it goes to so EFTPS is how we pay it down here, and it goes for the business's tax obligation based on the employees that they paid, and at the end, so it's a 941 statement, and that 941 is per quarter, and 940 is the whole year. And it says, so you average out, every pay period, you pay $7,000 or $5,000 towards federal withholding. And then each person has an amount that is connected to them, because at the end of the year, when that W-2 comes out, it is all connected. There's the 3 portions of it. One the employer keeps, one that goes to the IRS, and one that the employee gets.
Right.
The IRS is going to see that for employee Dionne, they should have on their credit, on their file, there should be, $100,000, whatever it is. The federal withholding goes towards whatever taxes they would owe based off of how much they made. And then the Social Security and the Medicare is what you're paying into Social Security and what you're paying into Medicare. So you can maybe take advantage of it when you get to that age, or if you can't take advantage of it, then, Social Security benefits, for instance. Most people cannot live off of their Social Security benefits alone, but it is helpful. And so all of it is calculating what you're going to get when you need these services, because eventually everybody will need these services.
Right. Okay, perfect. And this is for, again, the food and beverage industry, not so much the cosmetology.
And we'll get to why.
Perfect.
All right. So The FICA Tip Credit, formerly known as the credit for portion of employer Social Security paid with respect to employee cash tips, attempts to give some relief to businesses that pay an employer's share of employment taxes on tip income paid to their employees by someone else, which is basically what I just said. Even though the shorthand name of the law mentions only FICA taxes, it allows employers to take a credit against their federal income tax based on the amount of FICA and Medicare taxes paid on tips reported to the employer. The credit reduces the federal income tax of the employer by an amount based on the employer's share of employment taxes paid on a portion of reported tips. So to calculate the credit, eligible employers begin by calculating an amount known as creditable tips. Tipped employees are typically paid an hourly rate well below the federal minimum wage. The creditable tips calculation attempts to remove from credit eligibility those tips that make up the difference between a tipped employee's hourly wage and the federal minimum hourly wage that was in effect when the credit was enacted. So to determine creditable tips, you multiply the number of hours the employee worked times $5.15, because that was the federal minimum income, the federal minimum wage rate in 2007 when the credit was enacted. So you multiply the number of hours the employee worked times 515 to determine the federal minimum wage amount for the employee. Then you subtract from the number the actual wages paid to the employee to arrive at the amount of tips not eligible for the credit. You subtract the amount of tips not eligible from the total tips reported by the employee to determine the amount of creditable tips. And then you multiply the creditable tip amount by the combined FICA and Medicare tax rate, currently 7.65%, to determine the amount of credit available. And I have some real numbers that may help it make sense.
Yeah, my question with that is that $5.15, that was from the minimum wage in 2007. When it was enacted, is that still applied even though minimum wage is way above today?
It still applies. Yep. Okay. Because one thing we know, the government likes to take their time, snail's pace.
Yeah.
So, but right now it being 515, I think is probably beneficial to the employers. So let's do an example. So 123 LLC operates a restaurant and they employ individual Y. And during May, individual Y worked 100 hours and was paid $400 in wages and received $800 in tips. 123 is entitled to $52.40 in credits based on the following. So first, the federal minimum wage amount is $5.15, right? So you're going to multiply the 100 hours by 515, which gives you $515, right? Then the net tips ineligible for the credit is going to be 115 because they were paid 400 in wages, right? But the calculation that we did was 515. So you're going to subtract 515 from 400 and you get 115, right? And the creditable tips is 685, which is 800 in total tips less the 115 ineligible amount. And the total credit that the business is going to get is $52.40. Interesting, right?
Yeah.
So to qualify as a tip, now this I find very interesting, right? And keep it in mind because, just keep it in mind when you hear it. I'm pretty sure we'll have the same thought. So to qualify as a tip, the payment from the customer to the employee must meet 4 conditions. A customer cannot be compelled to pay it. The customer must have the unrestricted right to determine the amount. The payment cannot be subject to negotiation or dictated by employer policy, and the customer must have the right to determine who receives the payment. So for instance, a service charge applied to a bill for large parties or catering events that's then shared among the servers will not generally qualify as a tip that can be included in the creditable tip calculation. Because that was the first thing that hopped out in my mind was, wait, those service charges, those automatic 18%.
Yeah, for sure. There's like 21% over here. Yeah.
Well, don't worry. If you go to South Beach, to South Beach, when you start drinking, right, they're going to give you this is what the drink costs. then they're going to give you a service charge, and then you're going to have the space for additional tip where most people don't even see that. So they end up like double, triple tipping. Yeah. I've been a victim of that.
For sure.
Yeah.
I was a victim of that once, and then we were like looking over the bill, and I'm like, what is this 21% surcharge? And they don't tell you anything until that bill comes out.
Yeah.
It's not like a preface of any kind. It was very shocking.
You're having the time of your life. You're like, whoa. Hold on, let me see this. So yes. So, okay, the FICA tip credit is included on the employer's tax return as part of the general business tax credit, a non-refundable credit that can't reduce a tax liability below zero. So if it would get you below zero, you're able to carry the unused portions forward for future years. The expense that a taxpayer claims for employer FICA must be reduced by the amount of FICA tip credit claimed that year. And certain large food or beverage establishments, so U.S. restaurants that employ 10 or more servers on a typical day and serve meals on premises, are required to report to the IRS the total amount of tips that the employees reported to them. If that number fails to exceed 8% of the establishment's gross food and beverage receipts, the law deems that the employees have underreported their tips. So if this situation is uncovered by the IRS, it's likely that a recalculation of tip income would be required for at least some employees, and it would also have an effect on the employer's FICA tip credit for the year.
Very interesting.
Yes, so they try to, I hope everybody's honest, right? But when you're dealing in cash, we don't know. But the IRS has a safeguard against it, right? That 8% floor, you make sure you stay above that, or somebody's going to be in trouble. So, so now, how does it relate to the cosmetics industry? As of October 25th, 2022, the beauty industry continues to push for Congress to allow it to claim tip tax credit that would help save salons thousands of dollars in taxes. The Professional Beauty Association wants Congress to extend the Federal Insurance Contributions Act, or FICA Tax Tip Credit under Section 45B, to the beauty industry before the year ends. The FICA tax tip credit allows employers in the industry where tipping is more prevalent to use the credit towards payroll taxes they paid on tips from customers. However, the credit has yet to be extended. And if you notice, I know at my eyebrow place and maybe at my nail place, you cannot tip on your card. You have to tip in cash.
Really? And that's because they're kind of going
I'm guessing, right? Now it makes sense.
Yeah, no, for sure. Very interesting.
Yeah.
I mean, why can't cosmetologists and barbers really have this tax tip or this tax credit apply to them? Does that, if that were to pass, I'm assuming it's still in the works because it just happened 2 months ago.
They've been trying to get this to pass they've been trying to get this to pass for years. I want to say that the original article that I started on was a 2011 article. It's just as of October 25th, it still has not passed.
Geez. So if it were to pass, would that mean that they would lose certain write-off benefits?
I don't think so. I think they would get more, because so a lot of salons are set up in two different ways, right? They have renters and then they have employees. Employees doesn't matter what they have the renters. Okay, no, they have three setups. Employees, they have renters that just pay for their chairs, and then they have the people that they do the 60-40 split, which I don't think they would be employees, but they might be employees. I'm not sure because I've never, as much as I would love to, I've never worked in a salon, right? So those people that have employees, for instance, they pay them a W-2 check. So it doesn't matter if you did a service that got you $500, for your time, or $1,000 for your time. They're still paying you the $20 an hour.
Right.
And so they want to reduce their payroll taxes for those kind of situations. And I just think that everybody I feel like until we see the actual math, we do not know how beneficial it would be to your industry. But I think that what the cosmetology industry is saying is that we're kind of set up like the restaurant industry in that, this is our base salary, but then a lot of people get a lot of good tips. And so we should have the same benefits that the restaurant industry has. And so do I actually think when you actually work at the numbers that it's going to make a big difference? I don't think so. And I think that the difference is that with restaurants, they make this much in W-2 and they make this much in tips. Whereas when you are a hairstylist or a barber, you make this much in your actual work and you make this much in tips. So
I was just gonna say that. Like,
yeah.
I guess I'm a little confused on how that would benefit them if it's such a different like aspect. Like you said, they make so little in wages as in the food beverage industry, so much in tips, and then it's vice versa when it comes to. I don't tip my. I mean, it's probably bad, but I don't tip my like salon people more than what the service was.
And that's what I'm saying. Like, I would
Yeah.
never tip my hairdresser
Yeah.
more than what it costs to do I'm not even
Right.
not even more than what it costs. Like, yeah, that's
Right.
gonna be a 20% maximum.
Exactly. Like, thanks for your time. Thanks for doing a good job.
Right. Is it your birthday or Christmas? That's when we'll, upgrade it. But like, we're not
Right.
doing service and tip same amount. Not happening.
Yeah.
But like
Right.
at a restaurant, you should, if they're getting paid, like I know they were getting paid like $3, $2.50 an hour. Right.
Yeah.
And so these tips, they make up for it. So I do think that I can see how it more so applies to the restaurant industry just because their setup is so different. That's the only place that will allow you to pay. $5.15 is not the number that they pay people that work at restaurants. I don't care. This article can say what it wants to say. I know that it's not the number.
Yeah. No, for sure. I completely agree with that.
Yeah.
Very interesting. I guess I do have another question here.
Absolutely.
Okay, so what about these write-offs that they get? So they don't get the tax tip credit as of right now. That may change in the future. They've been working on it for like 10 plus years.
Right.
Little iffy on if that should happen or not, but I'm not so familiar with either of the industry, so we'll see. But what about these write-offs that the cosmetologists and barbers get kind of in exchange for not having this tax credit?
All right. So pay attention, right? All of my, so I have, both, actually two of my best friends, like a guy best friend and a girl best friend. One is a hairstylist and the other is a mobile barber. And so like, I was speaking to Monique, the hairstylist, one this morning. I was like, I'm doing a tax Thursday. I got to make sure I send you this PowerPoint after so you can deduct all these things. It's so great. And then, every time like this is what you do. All right. So there are specific tax write-offs for beauty industry professionals, such as licensing fees, booth space rentals, supplies, office expenses, and business-related insurance expenses. And it's important for everyone to know what is available. So your licensing, that is a deductible cost. So small business owners may deduct the cost of professional licensing and education expenses to maintain the licensing. It's just like lawyers, your bar dues and then your CLEs if you have to pay for it. Individual states are also require continuing education to maintain active cosmetologist licenses. The IRS allows independent contractors to deduct the cost of education required to maintain an active license on your income tax return. And so to do this, you just keep records, permanent records. Number one thing I could always say, permanent records. All the IRS has to do is make the allegation. Once they make the allegation, it's on the taxpayer to back themselves out.
Right, right.
Rents and rental fees. So just as salon owners pay rent for their business space, an independent cosmetologist is required to pay regular rent for your workspace. So this rent is deductible as a business expense on your tax return, and so you have to keep copies of your booth rental agreement and receipts for rent paid to salon owners as documentation of the rent you pay for tax purposes. So let me talk about this. And this has nothing to do with any of the people that I know. This is just overall what I've seen in life. A lot of people pay a lot of things in cash. They don't get receipts. And, there's a lot of under the table things that go on. Me personally, I would always get a receipt. Because you just never know when somebody's back is against the wall what they're going to do. So you may be paying them under the table and think that everything is fine. And then they may get in a situation where they say you've never paid them.
Yes. I'm the same way with my receipts.
Right?
Because of that very reason.
If I pay you in cash, I'm keeping the receipt. I'm a shredder. I'll shred it. I shred everything all day. I love shredding. Don't be in my wallet from Friday to Monday. Oh, but if I paid cash for it, I'm keeping the receipt because I need the proof just in case anything, God forbid, happens.
For sure.
All right. And everybody's your friend until they're not.
Yeah.
Okay, so supplies for your business. Independent cosmetologists must maintain their own cache of combs, shampoo, conditioner, and hair gels. You can deduct these expenses against your income. Related deductible expenses also include your appointment books, your pens, your pencils, your business cards, your magazines for customers. Your business insurance deductions. Many professionals carry liability or similar business insurance for their practices. Cosmetologists may be required to obtain business liability insurance as a prerequisite for renting booth space at a salon, and this expense is directly deductible as a business expense. I know those salon suites, man, they seem like a good idea, but they are super expensive. You have to have all of this stuff there. I think that if you were ever going to do like a salon suite, just my, FYI, you should have a partner with it. And so you guys kind of flip days. And so it's not as expensive because it's not, I mean, you might as well own your own salon if you're going, the rent in one of those salon suites. It's a good, it's an easy setup, right? It's a plug and play.
Mm-hmm.
But nothing in life is free. Everything has a cost. And so while you may be, saving on this end, you're paying on that end.
For sure. And this is a lot directed towards independent.
Yes.
Not so much like an employee working at a salon.
Not the front desk person, right. And so not the front desk person. And I think that if you are a hairstylist, just my opinion, you should not be their employee anyways. You should be an independent contractor because why you're benefiting their business, not your business. You're never going to grow your book. You're never going to get paid what you're supposed to get paid. If they're charging, $700 for a balayage, right? And you're only getting paid, which sounds good, $30 an hour, right? If a balayage takes 5 hours, that's what 5 times 5 is $250. Right, but they're charging $700. So you just lost out on $450 because of whatever reason. A lot of times it's for fear of going out on your own or the situation. I just don't ever think as an employee you're gonna get paid what you get paid if you just did it yourself. And I definitely think that splitting the commission, that 60-40, 70-30, 50, I see at this age though, because when I was younger and I used to, know people that did salons and all that, like I would think it was good. Oh yeah, you're paying 60%, 40%, but like if you just pay them $250 a week and you get to keep all of your money.
Right, exactly. And what about people who like do stuff from home?
So
would they still be able to write off a lot of this stuff here?
You will be able to do home office deductions. So I'm going to give you common hair salon and barbershop deductions. And this also applies if you do business at home. I mean, you have 2 different write-offs. You have the salon space and then you have your home office. And then in your salon space, the water, everything, the electricity of that space, like everything is write-offable.
Right. Okay.
Yeah. So
and how would you exactly write that off? Is that something like a month I use this amount of water compared to like my actual house water bill?
So it's a percent. It is a formula, right? So what I would do is like, okay, so your house is 1,000 square feet, and then one of the rooms you use is 200 square feet, and the other room is 200 square feet, right? So that is 400 square feet. One is the salon, one is the home office. So it would be just division. Whatever the amount of water that you use, say that you have a 5-bedroom house, I would divide it by 5, right? And then you have to have a reasonable calculation, a reasonable stance of how you got to that position. It's reasonable to say that, okay, we're going to divide the amount of water usage by room. It's typically by square feet. So if you have, 1,000 square foot house and your water bill is $500, then you divide 500 by 1,000, right? Yeah, 500 into 1,000. Because you're going to get like a smaller number and then you multiply it by, like that 400 that I said, whatever that square feet is. So it's really, you take the full square footage and then you do division. So if you pay $1,000 a month in mortgage or rent, and it's 1,000 square feet, then it's $1 per square foot. If you have 400 square feet as a dedicated salon, then $400 is going to be a deductible business expense, and then $600 will be your personal expenses.
That makes sense. A lot of math,
but it's not that bad. So let's just do some easy things or some common deductions: your advertising, your car and truck expenses if you use that vehicle for work, commissions and fees, contract labor, employee benefit programs, insurance, interest, legal or professional services. And mind you, this is for all businesses, right? But I think that salon owners and barbershop owners don't think that these apply to them, and they do. You're a business just like any. It's like selling flowers, selling pieces of paper, right? So let's see: legal professional services, office expenses, pensions or profit sharing plans, rent or lease expenses, repairs and maintenance, supplies, taxes and licenses, travel and deductible meals, utilities, wages, and other qualifying expenses. And you may even qualify for a home office deduction if you have a dedicated space that you do your work in. I just want to talk about depreciation and bonus depreciation. Bonus depreciation has been extended to tax year 2026. It was supposed to end in 2023, and then you'd have to depreciate regularly like anything else. But now what depreciation is like if something has a life that's longer than a year. Then they have class lives, and then you divide the price by the class life, and you're able to depreciate or deduct that from taxable income every year. Now, up until 2026, you can deduct that in the first year, 100%. Let's see. Then you could get the lifetime learning credit if you have to keep on, going for your education. The lifetime learning credit is $2,000 per tax return to cover whatever your qualifying tuition related expenses are. And of course, there's people in school that should know this, but nobody knows this, right? Like, it's unfortunate. And what else? Final thing is that don't forget to report your tip income, and especially if people are paying you through any of the Venmos, the Zells, the Cash App. If you get paid more than $600 per year for anything, you're going to get a 1099-K, and everybody's information is going to be there anyway, so you're just going to probably just want to report it on your own.
Right. Okay, perfect. And that does apply to anyone and everyone.
Everyone.
To that. So I just got done with my wedding, and I had to tip everyone through Venmo.
Yes.
So,
fun time.
Yeah, a lot of fun. Okay, so what would you say would be our takeaways from this super interesting topic that applies to food and beverage, and then our cosmetologists and barbers?
Okay, so for the food and beverage, the 45B FICA tip, that is going to benefit the employers the most because they're kind of getting a credit for taxes that they're paying for tips that they didn't pay out, right? Mm-hmm. And so I think it's a beneficial thing, and I feel like if you own a food establishment that meets the requirements, 10 or more servers, and you serve food on the premises, then you should look into it. And if you don't know how to look into it, contact me, Dionne at smart-counsel.com. And if you are a salon owner or a barber, or if you own a salon or you own a barbershop or you have a mobile barbershop or a mobile salon, your business is just like any other business, and you should take deductions and expenses just like any other business. And if you have any questions on how to properly plan, contact me, Dionne at smart-counsel.com.
Perfect. Awesome. Thank you so much. It's very interesting. I mean, like, again, even not being in the industry, it's not something that you ever really think about when it comes to filing for taxes. Is there a credit? What can I deduct? So I hope everyone tuning in, if you are in any of these industries or feel like this applies to you, that you walk away with something very useful, something new. And again, if you do have any questions, contact Dionne directly at Dionne at smart-counsel.com, or you can DM us on Instagram or generally at attorney at smart-counsel.com. And we're more than happy to help you guys. Dionne, thanks so much again. I hope you enjoy your Thanksgiving.
You too.
Eat lots.
I am. I exercised this morning to make sure that I can,
oh my gosh, you're so sweatpants and stretchy pants are like the way to go, especially for me right now.
I'm gonna need it. Trust me.
We're definitely doing that. Awesome. Thank you guys again so much for joining us for another episode of Tax Thursday. Make sure that you like this video, you comment, leave any comments below, subscribe to our YouTube channel, and follow us on all social media platforms so you don't miss out on any future Tax Thursday episodes. Until then, we'll see you guys next time, and I hope everyone enjoys the holiday.
Thank you, Didi. Have a wonderful day.
You too.